Hi there, welcome to the Ecofina Financial Channel. My name is Philip, and as usual, we'll be talking about something very important happening in the global economy. Remember to click the subscribe button and also share this video and like it if you find it informative. This will help the channel grow and also help others to be able to access the information we share here. So very quickly today, we'll be talking about the Central Bank of Nigeria's decision to raise the interest rates, which is something they are doing for the first time since 2016. In fact, for many of the monetary policy committee meetings they've had, they've retained the interest rates, which more specifically is the monetary policy rate. But for the first time since 2016, they've raised the interest rate. So we'll be looking at what implications that has, what was the rationale, what was the thinking of the Central Bank of Nigeria when they raised this interest rate, and what are they seeking to achieve, basically. So that's what we're going to be talking about. Very quickly, the monetary policy rate is actually the rate at which the central bank lends to commercial banks. But you know, the way it is simple. If the central bank is lending to a certain set of people at a particular rate, then it means that they can only lend to others at a higher rate. And that's how it works. So the central bank lends to the commercial banks at a particular rate, who in turn also, you know, of course, based on the benchmark that they already have, they're able to charge higher. And it's the tool which the central bank normally uses to control what is happening in the economy. Is a monetary policy tool. So when the Central Bank of Nigeria wants an expansion in the economy, what they will do is that they will lower the interest rates so that saving will become unattractive to many, and then many will spend on the real economy. And if they want the reverse action, which it is that they want to tighten the economy, then they raise interest rates. That raising of interest rate means that many people can also now save at the higher interest rate, because of course, that is what drives most of it. So why did the CBN raise it? So there are two challenges really that the Nigerian economy is facing. In fact, it is more than two. But from an economic perspective, let's just limit it to two. One is that there's an inflationary pressure. Now, when there's an inflationary pressure, it means that there's so much money in the economy and savings is unattractive, which means, and the prices of goods and services are going up. So to curtail that, what the central bank normally would do is to raise the interest rate so that the lending rate goes higher, which means that people are afraid to lend, or, you know, of course, it becomes more costly to lend, to borrow. It becomes more costly to borrow. And then what it also means is that the savings rates would most likely go higher. So things like the treasury bill, bonds will also go higher, which will become attractive to especially conservative investors who do not really like the equities market, do not really like the investing in the real economy. They would rather save at the rates which is attractive. And that's what this has done. So the Central Bank of Nigeria has raised the interest rate to 13%. It was at 11.5% up until the raise on Tuesday. And, you know, of course, nobody knows for how long that's going to be. At least it's going to be there until the next monetary policy committee meeting next month. So why did they do this? They believe that, in fact, in the words of the central bank, members expressed deep concern about the uptrend of inflationary pressure. Despite the gradual improvements in output growth, the committee noted that the current rise in inflation may be inimical to growth and thus hinder the full recovery of the economy. So they are looking at it from the fact that even though there is a slow economic growth, in fact, the growth for the first quarter of 2022 is 3.11%, which is actually lower than for the fourth quarter of 2021, when it was 3.98%. Now, growth is slower at 3.11%, And inflation is also higher at 16.82%. So they'll be caught in between the middle of the devil and the blue sea. If you raise interest rates, that means you're trying to curb inflation. But it also means that it can work against economic growth, because for an economy to grow, normally what the CBN would do would be to lower the interest rates so that there can be more spending in the economy and the economy can grow. So between those two decisions which they had to make, which is whether to increase interest rates to curb inflation or lower interest rates to tackle economic growth, they've chosen to pursue that of the inflation, to curb inflation. Of course, many people are feeling it. Prices are going higher. Hardly would you see anything that is still at the same price, even over a couple of weeks. And it's becoming very difficult for many. And I think that's why the central bank has decided to toe this line. Now, like I said before, it means that some people can now save at a higher rate, so treasury bills and bonds might become more attractive. But it also means that businesses will struggle, especially with the higher level of costs to lending. So banks will lend at the higher rate, and it's going to become more difficult. Yes, there are also other things. And if you have questions about what other impact this could have, you can let us know. And we'll talk about it, or we'll just respond to you in the comment section. But we just felt, since the CBN has raised the interest rate, we should let you know what the implications would be. Remember, click the subscribe button, share the video, let others also get a feeling of what is happening so that they can make the required adjustments if required. And we'll be back with you next time. Thank you.